And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Scarlet Fu, taking you through to that closing bell with the global simulcast. It starts now. Tim Stenovec in the radio booth, Isabelle Lee by his side. Carol Masser has the day off. Welcome to our audiences across all of our Bloomberg platforms, including our partnership here on YouTube, as we focus in on the biggest story of the day, Tim Stenovec, and of course that is the nuptials between Travis Kelce and Taylor Swift.
I knew you were going to say that. You know, there's always a Bloomberg angle to a story like that.
Oh, yeah, we will have it.
Yeah, we have it. Yeah. Taylor Swift turns her engagement into another media coup, written by none other than our media reporter, one of our media reporters, Hannah Miller. It's all about how they did it on Instagram, and that's where they go. That's my coverage. That's the extent of my coverage, Isabelle.
That's what you've been focusing on.
Of the story. I know you're all over it.
I think another business angle could be the size of the ring, and whether it's lab-grown or whether it's a natural diamond. That definitely is of interest to the viewers and to my friend group. My group chats are all lighting up.
I feel like we're going to get an answer to that sooner than an answer to what happens at the Federal Reserve with Lisa Cook, her fate, especially as her lawyer plans to challenge the firing by President Trump.
Yeah, and thanks for bringing this back, Scarlet Fu, because we talk about a market that, I think we came in today expecting more of a sell-off in equity markets and, of course, a lot more ructions in the bond market. We did not quite get that. You did see a steepening of the yield curve, of course, with the yields on the shorter end of the curve moving lower, longer than the curve moving higher. And as far as stocks go right now, guys, right around session highs.
Is the market essentially saying we're not buying into this notion that the Fed independence is threatened, Romaine?
I would think that they're maybe buying not so much into the idea of independence, but they're buying into the idea that one way or the other, not a whole lot is going to change at the Fed. The idea that they are expecting rate cuts. They think they're going to start in September. And at least based on what we know now, Lisa Cook's not going anywhere. So maybe it is just the status quo. The S&P 500 moving higher by about 27 points on the day, closing up 0.4%. The Dow Jones Industrial Average up 0.3%. The NASDAQ indices, both the composite and the 100, each up about 0.4%. And your outperformer on the day, that will be the Russell 2000, 19 points higher, or 0.8%.
In the S&P 500, pretty much an even split of stocks that moved higher and lower, with a slight higher number going to stocks that moved higher. 258 to the upside today in the S&P 500, Scarlet, 243 to the downside.
All right, let's take a look at the IMAP as well, and you'll see a pretty big mix of sector performances. What's notable, of course, is that the bigger sectors are in the green, led by industrials, financials, and healthcare. Industrials, the only group gaining more than 1%. On the downside, you do see some red slices there. Consumer staples losing 0.5%, REITs losing about 1/3%, and communication services just marginally lower right now.
All right, I want to talk about one of the most actively traded stocks. And it's going to have to wait because we got some earnings coming out, Romaine.
Yeah, Okta, the software company, reporting earnings right now. The knee-jerk reaction, the shares to the upside by about 6%. A beat on the bottom line. 2Q EPS, 91 cents a share. The street was looking for 84 cents. Revenue in the quarter coming in at $728 million. The street was looking for roughly about 697. And here's your guidance for the current quarter, the third quarter. The company says it sees revenue in the range of $728 to $730 million. The low end of that range above the average of analyst estimates. EPS, a range of 74 to 75 cents. The street was looking for 75 cents on average. And for the full year, the company guiding for EPS of $3.33 to $3.38. And that does appear to be a bump higher from its previous guidance. So basically a beat and a raise here.
A beat and raise, and also margins are also expanding, at least adjusted operating margin, 28% versus 23% a year ago. And within the businesses, Tim, I'm looking at professional services, which is the smaller part of its business, up 21% year over year, coming in at $17 million. The subscription revenue business, which of course is more consistent because it's recurring revenue, $711 million. That is up 13% year over year, also better than anticipated.
And we should point out, while this is a relatively small company, $16 billion market cap, there's a lot of focus on it ahead of NVIDIA, which reports about 24 hours from now. Of course, Okta with a big presence, or at least trying to have a big presence in the AI space, and a lot of concerns and questions, Isabelle and Tim, about exactly whether that spend is going to continue at its current pace.
Okta shares moving between gains and losses, up about a 1.1% in the after hours right now. We will be glued to NVIDIA tomorrow in our special coverage, too, on Bloomberg Television and radio. Back to some of the big movers in today's session. I want to start with EchoStar. A share surged to a record, most ever at one point in the day, ended up closing out the day up 70% today. This, as the company said it's agreed to sell spectrum licenses to AT&T for about $23 billion in an all-cash transaction. AT&T said the acquisition of this spectrum will strengthen the company's ability to deliver 5G and fiber services across the U.S. EchoStar, for its part, will continue to operate in the U.S. market as a hybrid mobile network operator under its Boost brand. Also, keep an eye on what happened with shares of Lilly today, to the upside of 5.9%. This after news that its experimental obesity pill helped patients lose 9.6% of body weight in a trial. So instead of a shot, yes, it could be available in a pill at some point in the future. Patients who were given the highest dose of the pill lost around 21 pounds and saw significant improvements in blood sugar levels, according to the company. Shares higher today by close to 6%. And finally, keep an eye on stocks in the defense sector today, particularly Lockheed Martin, which moved to the upside about 1.7%. This after Commerce Secretary Howard Lutnick suggested earlier on CNBC that the U.S. government is looking at the defense sector for potential stakes in companies a la Intel. The secretary did signal out Lockheed Martin, saying the company makes much of its revenue because of the U.S. government and is, quote, basically an arm of the U.S. government.
Let's now look at decliners, Constellation Brands. We have the shares down by nearly 4%. That's after Bank of America downgraded the company to underperform on weaker beer trends. So more noteworthy is the fact that the bank holds the only sell equivalent rating. So they cut their price target to a street low of $150. That's from $182. So the stock saw pressure and is down by 3.5%. Up next is Keurig Dr. Pepper. Shares are also down by 6.5%. That's after HSBC downgraded the stock to a hold from buy. This comes after the JDE Peat purchase announcement on Monday. So the price target is cut to $30 from $42. The analyst there said that the unwind of the 2018 Keurig and Dr. Pepper merger comes at a, quote, high acquisition cost. And lastly, we're looking at Salesforce. It's also down by 1.5%. Oppenheimer cuts its price target to $315.
All right, let's just jump here on earnings. We have earnings from MongoDB, and I'm going to pull them up right now. We do see for the second quarter, this is the quarter that ended, the loss per share was 58 cents, which was smaller, more narrow than what analysts had versus last year, I should say, which was 74 cents a share. Adjusted EPS was $1 versus the consensus estimate of 65 cents. In terms of the revenue, it's $591.4 million. Analysts were looking for $554. The outlook for the full year, $2.34 billion to $2.36 billion. That is an upgrade from the previous forecast, which was at least $2.25 billion to $2.29 billion. Full year adjusted EPS, according to MongoDB, also goes to $3.64 from $3.73. That is a notable upgrade from the previous estimate of at most $3.12. And you could see the stock responding here, up 12.5% right now in after-hours trade.
Kind of interesting to see some of these mid and smaller software companies getting a bid here in the after-hours trade. A lot of concerns, of course, heading into those earnings out of NVIDIA tomorrow. The idea that some of the spending that had been flowing into some of these identity security companies, some of the cloud providers like Box and, of course, MongoDB, that we would see some weakness there. But the earnings coming in right now, and at least for the current quarter and the guidance for the next quarter, seems to be holding up on MongoDB. Box also reporting a beat and a raise there here on a day where there is a big focus right now on corporate fundamentals with NVIDIA up ahead in about 24 hours. But, of course, right now, everybody obsessing over the Fed and what may come next. We saw the steepening of the curve today. A lot of concerns here that, yeah, we may end up with a dovish Fed no matter how much this shakes out. But, of course, this also could be a Fed potentially that could end up maybe not being as prepared to fight inflation longer term. And that's a big part of the reason why you're looking at the long end of the curve moving in the opposite direction.
You know, one thing that Tim pointed out that I thought was really interesting was Lockheed Martin and defense companies rising after Howard Lutnick, the U.S. Commerce Secretary, suggested that the government is looking at the defense sector for potential stakes in companies. What I'm not clear on is why this is seen as a good thing for the company, why the defense shares would be rallying, because it's not just Lockheed Martin. We also saw RTX and General Dynamics gain ground as well.
Well, there are a lot more questions than there are answers at this point. I think maybe there's expectations, or at least in some cases wagering, that there could be some support from the U.S. government for some of these companies. After all, in some of these cases, the U.S. government is the biggest customer of these companies. But I think it opens up a bigger question about the role of the United States and the role of government in private corporation. And I think that if you were to look at a traditional Republican view of free enterprise, it would not include a 10% stake in Intel, for example, or it would not include funds going to a miner like MP Materials. But the president and his cabinet have really made clear this is a new era when it comes to the corporate world.
Also, it raises the question, would partial government ownership really strengthen national security planning or risk distorting market competition and pricing in the sector? And we were talking about this earlier, Tim. What influence would the government gain on company strategy and really just management decision-making if they take a significant stake in companies like Lockheed Martin or Intel?